sheet and just go to the case, and today you are only going to tell me, I mean, how you are going to record the transactions in the case. What is the case all about for the first half of the year? Who has read the case? Please raise your hand. That is the first page you have read, right? Yesterday only in the class I asked you to read the case. So no one has read the case?
Ma'am, only first one. I mean, first page.
Yeah, first page. Yeah, have you read it? I mean, what is it all about? I mean, what is the problem, or why? What is the case all about? Yes.
It's about setting up a new company, like and the legal charges involved, and after that the cost of building machinery and the raw materials. Yeah, so that is it.
Okay, so I mean, just go to the next page, second page.
Ma'am, is it a company or is he applying for a patent?
No. It is about a company, right? Acha, go to the second page and just read. I mean, it is a continuation. The first page, last paragraph is a continuation, right? The second page, first paragraph is a continuation of the first page. So just read till that part. Haven't much to show for it, and then tell me what is the problem here. I mean, is there any problem? What do you think? I mean, how we can say that? I mean, why it is? What is the doubt here? Okay, so where is the doubt? It is said that all this discussion of what we are going to do is well and good, but all I can see is that 6 months ago we had 3,75,000 and now we have only 2,30,000. And we have managed to lose 1,45,000 in 6 months and haven't much to show for it. So what is your comment on this particular statement? Is it a correct statement? Or if not, why it is not a correct statement? Or if it is yes, then why?
Ma'am, it's not a correct statement.
Why? Where is the
Because
mistake?
that is investment.
Yes.
And
So where is the fault?
the
Which
asset
part of
column
this
is
statement?
increasing, but cash is decreasing, but we are increasing the asset column.
Yeah, fine. So which part of this particular statement, the last line, which part is it is wrong? What particular term?
Ma'am, it is the term that investor is saying that we lost
Yes.
1,45,000.
So that is the point. So when we are saying that we have managed to lose 1,45,000, that means it is not a loss, because loss comes from our income statement, and loss is what when we are generating some revenue and our expenses are more than our revenue, then the question of loss comes. So here we cannot say that we are losing, right? So that is the incorrect one. Okay, so now we need to check that, as you said, that with this cash they have only built up some assets, right? So at the end of 6 months you should do a review of, you need to prove that it is not a loss, right? Isn't it? So how you can prove that? Only if you prepare the financial statements, then you can show that why it is not a loss, where actually you have recorded these transactions, right? So that is where I want you to do the recording of the transactions. Okay, so tell me one by one and prepare one balance sheet, one profit and loss account statement, and one cash flow. Cash flow, in a sense, you have not yet learned about how to prepare cash flow statement, but just whenever the cash will come in, we will put it as inflow, and whenever cash goes out, we will put it as outflow. We will just keep taking the balance of the cash after each transaction. And the end balance, we will consider it where? End balance of cash, where it will go, with statement?
In the balance sheet.
In the balance sheet. In the balance sheet cash side, it will, I mean asset side, it will go as cash. Okay. So we will do like this. So now tell me one by one, please raise your hand. Okay. And we will discuss the transactions one by one. So first one. Anyone other than Divyam? Pranav, yes, Pranav, you tell us. Yeah. What is the first transaction, first of all, and then the treatment?
The first transaction is that some consulting engineer from the firm developed the prototype.
No, I am asking about the first page, the half yearly, first half of the year, when the company started, right? So Pranav, are you answering?
I have to study. Read it down.
With the patent.
Acha, Divyam, please wait, because I want answers from others. You have answered many a times. Yes, then Lakshyata.
Not
What is the transaction? First tell us.
initially there has been a share distribution of like 500,000 shares, and 125,000 shares have been used to take the patent from Alexander, as both of them are different entities. So equity will rise by 500,000 shares.
So just everyone please put it in the Excel, okay? And at the end of the class, you please show me your, what you have prepared so far. We will do it now only, whatever part we can do. So you prepare the Excel now only. So as Lakshita has mentioned that it is 5 lakh shares were issued. And he received 1,25,000 in exchange for his patent, and the remainder were sold to the investors at $1 per share. Okay, so where will be the treatment? Not only the equity, Lakshita. Tell me where, in which financial statement, where it will go, because at the end of the day, you need to match the balance sheet, right? If you do not put it, record it that way, you cannot. So how much you will put it where?
Yeah, so, I was actually saying that. So
just a minute. I just remembered. So let me just tell you. I have given the assignment. No, so I have today only in the income statement slide what I have uploaded. The last slide you will find the solution to that assignment. So what I found is many groups have made a few mistakes in that solution if you just follow. And if you have any question regarding the solution, you just check it and let me know in the next class. Okay, if you not understood something, if there is some kind of confusion. Okay. Okay, then yes, tell us.
So equity will increase by 5 lakhs, and
okay, so it will go to which statement?
It's in balance sheet.
Yes, balance sheet. Yeah, so balance sheet, equity side, just write down your equity as 5 lakhs. Okay. Yeah, then?
Then as we got the patent, which is worth 1,25,000, so the asset side will also increase because it's an intangible asset.
Okay, so put in the asset side patent. In your fixed assets, write down the asset, patent, and then 1,25,000. Okay, then?
And cash of like the remainder, 3,75,000 is going to be the cash.
So make a separate cash column, which is separate from the balance sheet, and put it there. The rest of the, what is the rest amount?
3,75,000.
3,75,000. So just 3,75,000 plus 3,75,000. The positive figure you put in the cash column.
Now, like when the legal fees is paid, this will affect both the balance sheet as well as the P&L statement.
Okay. Just then let others also answer. Lakshita, thank you for your answer. Then who was else? Raise your hand for the next transaction. Next transaction, please. Someone. See, I mean, sometimes when you are recording the transaction, you need to make assumptions also. So there might not be any right or wrong answer. So just, I mean, give an attempt, okay? I encourage everyone to answer, not only a few students only. Otherwise, you will not understand. Ritik?
Yes, ma'am. Ma'am, this one regarding January 5th, paid 7,500 in legal fees, charter cost, and printing expenses. So,
See, I mean, we are preparing only till June, okay, the first half of the year. So it is a half yearly statement we are preparing. Later on, we will do it for the whole year. First, let us only do for the first half of the year. Yes,
ma'am,
so.
ma'am, actually, my network wasn't good, so I didn't hear till what transaction Lakshita took it. So I was on this part, January 5th part, January 15th part.
Fine. So what is the transaction?
Okay, ma'am. So the cash will reduce 7,500, and similarly on the equity, on the owner's equity, we'll have an expense of 7,500. So both the left hand side and right hand side will reduce by 7,500.
Fine. But I mean, which statement where it will go, just let us know. Because I mean, everyone is supposed to record it now in the Excel sheet. That I will check after the class. Yes.
In the balance sheet.
Balance sheet what? What will go in the balance sheet? Which one? As cash, right?
Yes,
so just do one thing, everyone, please. I mean, just from the 3,75,000, no, plus 3,75,000, a cash column you have prepared. That is a rough. The last ending balance you will take it in the balance sheet. Okay. So plus 3,75,000, then minus 7,500. Put the 7,500 minus there. Fine. So where the other side will go, Ritik?
Ma'am, from the owner's equity, like the expense, expenses.
Which statement? Which statement?
Balance sheet.
Balance sheet. Balance sheet where? In the equity side?
Yes, ma'am, on the equity side, like as
okay,
I explained.
Ritik. Okay, Ritik. So here I want to know that if others also agree that it will go to balance sheet equity side. So equity is increasing or decreasing?
Ma'am, decreasing.
Decreasing, okay. Okay, who else wants to answer? Is Ritik correct? It will go to balance sheet equity side?
Ma'am, or
Yes.
it should go in the cash flow statement.
Cash flow statement has nothing to do with your income statement or balance. It is a checking tool. Okay, the cash inflow and outflow and end balance, is it matching with the end balance of your balance sheet cash figure? So it is not a complementary statement, but balance sheet and income statement complement each other. Without income statement, you cannot prepare the balance sheet, and without so that's why. So definitely it it will not go to the, it will go to the cash flow statement, but I am asking that the effect, either it needs to go to income statement or balance sheet. Okay, so where it will go? Ritik said that it is a decrease in equity, and it is we need to put it in the equity side of the balance sheet. So is everybody agreeing with Ritik? Or any other idea you have?
Excuse me.
So no one? Okay.
Ma'am, in the income statement.
I'm like in both in the income as well as the balance sheet.
And because what balance
Yes,
sheet
Divyam, yes.
what balance sheet shows it in a point of time if we freeze it and the position of the company. And through the income statement for the 6 months we can go through the expenses, revenue and everything.
Yes.
And then finally we could write that down in the balance sheet, everything.
So first of all, if it is an expense, Ritik, if it is an expense, then definitely it is going to affect your equity. But in that sense, all the revenues and expenses are going to affect the equity, right? So, but we do not record all those directly to the equity, isn't it? What are the steps? First, what is the nature of the account? Is it an expense? Is it a revenue? And if they're expense or revenue, where we are going to put it? In the income statement, because you need to see that what is the performance of that particular year. You need to match the expenses with the revenue. Otherwise, if everything you are going to, take it and consider it in the balance sheet equity side, then there is no reflection of any kind of revenue or expenses in your income statement, right? And disclosing all the revenue items and expenses, then we get the profit that we disclose, and that profit at the end of the year we take the profit and we put it in the income statement, right? So expense, if you agree that it is an expense, then it should be treated as an expense and it will go to your income statement or the financial statement. Okay, fine. But then Divyam, is it, that Divyam said that it is expense, is it an expense? Then the next question comes, that is it an expense? Everybody is agreeing that it is an expense?
Yes, ma'am.
Yes, ma'am.
Okay, so what kind of expense it is? What is the purpose of this expense?
It's a legal fees and something
Legal fees for what?
Operational
in
purposes.
for incorporation of the company.
For incorporation of the company. So are you going to incur it each and every year?
No.
It is for incorporation of business, right? So it is a one-time expense.
Yes, ma'am.
Isn't it? So do we consider the one-time expense as our expense should be? What do you think? Or is it that the incorporation expense what you have incurred in a particular year is incorporation at the start of the business? So its benefit is going to be over in that particular year only?
No,
No,
ma'am.
ma'am.
Okay, so see, these comes under the head. It is called the preliminary expenditure. Okay, so when we go to set up a company, we incur some kind of expenses. So this kind of legal expenses is such an expense. When we incur, we consider it only once, and the particular farm that we are setting up, the company we are forming, it is going to stay for lifetime, right? It is a by the going concern concept. So it is not that this incorporation is only going to be expensed in a particular year only. So the benefit we will get over the lifetime of the business, right? Now the question comes in that sense, it actually is a kind of that preliminary expenditure, as I mentioned, it is an expenditure. And as I said, expenditure means it is asset in nature. Now, what you can think of is preliminary expenditure, you can treat it as an, deferred revenue expenditure. Why? Because maybe say, for example, here it is only 7,500. So if you have incurred a huge amount, okay, so for example, few lakhs, maybe you have, introduced capital into the business of few lakhs, and your initial expenses, legal and other incorporations and other initial investments and all, it becomes a huge amount. Okay, So this kind of expense, if you treat it as an expense in a particular first year of the business, then actually it is not going to match with your revenue, right? And it will show your profit a very low, isn't it? So what we can do, you can also treat it as your deferred revenue expenditure, and you can spread it over a substantial period of time, or you can take it as an expense in your income statement, or you can consider it as your preliminary expenditure in the asset on the very beginning of the uh, inception of the business. So now the point is, another thing, that the concept is the another principle is there, the materiality concept, okay, the materiality principle. Now, since in terms of the capital introduced, or in terms of the other size of the business, maybe this 7,500 is very minimum. So even if you put it in your expense side, maybe it is not going to make your profit, I mean, a very low figure. Okay, so then you can say that, okay, I am considering it. It is as per your discretion. I am considering it as my expense, and I am putting it in my first year income statement only. Or else you can have that freedom that you can put it in your asset side. Okay, so it will not go to your equity side. It will be considered in your asset side of the business. Now, if some of you put it in the expense of, side of the income statement, and for some of you are putting it in the asset side of the balance sheet, I have to accept both, because it is based on your assumptions only, your understanding only, your decision only. You have recorded the transaction. I will accept both. So wherever there is a scope of make your own assumption, make that assumption. Even if in your exam also, make that assumption, and then you write that why you are treating it as an expense, or as an asset, or as an equity. Okay. So now here, for at the beginning, when I have not started any generation of revenue, nothing. So let us put it as the preliminary expenditure, and let us put it in the balance sheet asset side, okay, for the time being, when we are preparing the half yearly financial statement. Okay. Hello, can you hear me?
Yes, ma'am.
So did you
Ma'am,
hear
so
the explanation?
in the balance sheet, we have to like add it in the asset column, right?
Yeah, yeah. So I mean, did you hear the explanation that I have given as the preliminary expenditure one?
Yes, ma'am.
Yes,
Okay.
ma'am. Like for the past 1 minute, you were not speaking anything. So before that,
Okay, okay.
everything.
No, no. I mean, somehow, I mean, I got muted, and that's why. I mean, then suddenly I noticed. Okay, so it was
Yes.
about the. I mean, treating it as your preliminary expenditure, and I am telling that. I mean, for the first year, for the half year financial statement. I mean, the first time when we are doing it, let us treat it as our asset. Okay, and later on at the end of the year, when we are going to prepare the whole financial statement, then we will decide what we will do. But as a student, I mean, when you will get some kind of such confusion in your paper also, then just please put your assumption that why, if you are considering it as asset, why, And if you are considering it as an expense, why? And I cannot tell that you are right or you are wrong. So both of you will be correct, but you need to put your own assumption or justification behind your answer. Okay. So the next one, what is the transaction and who wants to answer? Is Aditya? What is the transaction?
Ma'am, the transaction is that the company is spending $62,500 in building the machinery that would have long-lasting benefits of producing the commercial models of the things that we wanted to build. So the firstly 62,500 is a cash outflow. So in the asset side, it would be shown as a cash outflow. In return, we are basically getting a machinery, which is a long-term asset, fixed asset.
So which financial statement? Which financial statement?
In the balance sheet.
Balance sheet, asset side. Good. So everyone, please record it in the balance sheet, asset side, fixed asset. Okay. And in the cash flow column, just keep it as minus 62,500. Okay. Okay. The next one. Next one, Shreyash. Shreyash, have you answered before? Shreyash, have you responded before today? Hello?
Hello.
Okay. So you do this one.
Okay. Okay, so ma'am, he purchased some raw materials for a price of $75,000. So it will be a short-term asset. It will be added as a short-term asset, and there will be a decrease in cash.
There will be a decrease in cash, yes.
Yeah, so we'll record it in the balance sheet.
Okay, put it in the balance sheet asset side under current assets, inventory, okay? And in the cash flow column, minus the amount. What is the amount?
75,000.
75,000. Okay. Anything else in the first 6 months?
Ma'am, we are keeping the cash as separate. Why we will not
Separate
incorporate
column, okay? Because I mean, cash flow, you will find that when you will prepare on your own, then also you do this way, because cash you will find almost every transaction has some cash, I mean, involved, cash is involved. So it is, I mean, pointless, or it is not possible every time you just do this calculation in your balance sheet cash side, right? So do a separate column, and the end balance only we will take it in the balance sheet. Okay, so any more transaction left? No, right? So what is your balance coming? Cash balance? Yes, Riyash? What is the cash balance?
I'm doing this.
Starting from 3,75,000, then minus 7,500, then minus 62,500, then minus whatever the material cost is, 75,000 or what. So what is the balance coming?
230K.
230. So that is the balance. It is matching with the, I mean, what is mentioned in the case, right? And where are the all expenses and all the transactions effect it is now, till now, where you are finding the effect of the transactions, which financial statement?
Balance sheet.
Balance sheet only, right? So there is no transactions we have recorded in our income statement. Okay. Okay. Then let us move forward. The next part of the case. Okay. Now again, go through the rest part. Read it. And let me know. Just raise your hand once you are over, once you are done. And share with me right after the class the spreadsheet you have prepared, where I have put the email, right? I have given you the email ID where to share. And since you are doing it in the class, please all of you send me the spreadsheet, not group wise. since we are doing it in the class itself.
Ma'am, can we keep the assets in one column only?
Yeah, asset in one column and liability plus equity in other column. But when you are describing what is the figure, which is the figure, so for example, machinery, then make it machinery and top on it, you just write it fixed asset. Okay. So you make a fixed asset as a subhead, current asset as a subhead, equity as a subhead, liability as a subhead, but the sides are two sides. Right side is for asset, fixed asset and current asset. The left side is the liability. Equity, subheads are equity. Under that you will put all equity related things. Then comes the liability. Then comes the long-term liability and current liability. Okay, this way you just prepare.
Ma'am, could you repeat those columns? Like I
Yeah,
have just prepared only asset columns.
I'm showing you just wait.
Sure, ma'am.
So this is your Excel, this is your spreadsheet. Okay, just right here it is balance sheet say as on the last date.
June maybe.
Okay.
Something like that.
Yeah. I mean, you will prepare two. One is for 30th
Yes.
June, then another is for 31st December, right? So
Yes, ma'am.
whatever, I'm keeping it blank. Then there is one side is asset, one side is equity plus liability. Under that, make some subhead equity and then long-term liability and current liability. Okay, and under asset it is fixed asset or one or non-current asset and current asset. This way you just record.
Ma'am, where will be the
And there is an income statement. Here it is revenue. Then somewhere here it will come as gross profit. Somewhere will come the operating profit. Here say net profit. Okay. And here make a cash column. Fine. So put your accounts under these subheads. So gross profit is from the revenues, direct cost or cost of goods sold if there is any, you will deduct and you will get the gross profit. And then deduct the operating expenses, you will get the operating profit, and then deduct the finance cost, then you will get the net profit. So this way. So these two, operating profit and gross profit and net profit, these are not heads, these are the outcomes. Okay, so are you done? Are you ready?
No, ma'am, just give me like 2 minutes.
What happened? Okay, so let us, let's not wait for the, everyone to read the whole case, okay? Let's do it one by one transaction first by another one. So the first transaction, what is it? See, what is the problem now? Now the company is in its full operation, and they have incurred other few expenses also. But then just the end of the 7th point, just read the sentences. In preparing his state of the corporation report, Alexander noted with some anxiety that the company's bank balance had fallen further, 1,17,000 from 2,30,000, and it became only 1,13,000. That means even if after having the operations in a right direction as per the management, then also its cash is continuously falling down. So that is the concern. So where is the problem? Is there any problem or not? That is the point. Okay. So for that, let us do again one by one, and then we will discuss. So I think everybody at least has read your first 2-3 transactions.
Yes, ma'am.
So Divyam, you just start.
Firstly, for the engineering service, the person was paid and the consultant. So in cash will decrease and
Put it in the cash column. Cash is decreasing, so put it in the cash column, minus 23,750. And then
prototypes were delivered, so it should be in fixed assets, right? Because so asset column will increase then, fixed assets, because
why it
these
is
are
fixed asset, Divyam?
because okay, so no, it will be current assets because prototypes might change in future. So it
Might
because
change means what is the definition of current asset?
something that will be used, an asset that will be used for the next a short period of time, like
That will be converted into cash. That means it is a
yes,
liquid asset. Current asset means liquid asset. Prototype is a liquid
okay,
asset.
no,
It is
it's
not a
not.
liquid asset.
So
Okay, so
yes, yes,
why we differentiate between our current asset and current fixed asset, current liability and long-term liability? These are liquid assets. These are this implies the liquidity ratios, the liquidity status of the company it shows. Okay, so don't
yes,
confuse with that.
yes.
And okay, so you are considering prototype as, say for example, asset means fixed asset. Fine. So why it is so? What is your explanation? Why it is an asset first? Tell me.
Because it will help us develop our product. Let's say a machine, we buy machines, so those are also fixed assets because it will help us develop the or manufacture the product.
So
And
it is,
prototypes are
everything helps us to develop the product, right? So when you are bringing some material, that also helps you to develop the product.
yes,
So why it is asset? Okay, anyone else, whether it is asset or what? Anyone who wants to try? No. Okay.
Ma'am,
So yes,
ma'am,
Aditya, yes, yeah.
I think it could also be since any startup or a business, whenever we form our initial product, so it's always a prototype. So we can also consider that since it's necessary for any startup or a business to have some initial concept design or a product. So we can also consider this as a prepaid expenditure, because in the future, it will help us make much more better versions of this same prototype. So the designing and the engineering of this prototype would be utilized in the future. Its benefits would reap us
So I mean,
better quality products.
It cannot be. Thank you, Aditya. It cannot be termed as prepaid expenditure, but its nature can be prepaid. You rightly pointed out.
Yeah, preliminary expenditure. I mean.
Yeah, but if you are considering it prepaid expenditure, say, okay, so where it will go? As you said that its benefit we are going to
prepaid
get over the time.
Goes to current assets, because in the short term only. It's a long term.
So you are considering it, first of all, you are considering it as an asset and then a current asset. Then next year.
No. Long term asset.
Long term asset. Okay, fine. Long term asset. And then, I mean, what will happen? So it will remain like this always as prepaid expenditure in your balance sheet. It will always remain like this, as you said that this prototype is going to help to develop the product, right? Over the time period. So is it going to stay with the same value in the balance sheet over the years?
It might depreciate over time, because
it might be depreciate means you might want to match it with the revenues of those years, right?
Yes.
Okay. So again, like that initial that preliminary expenditure. Okay. So again, this prototype is a kind of intangible asset. We can assume, as Aditya also pointed out and Divyam also, that it is not only this prototype is ultimately it is a kind of R&D outcome, right? So it is not that every time we are going to, it is a kind of recurring expenses. It is not that. It is not an operating expense. It is not a direct cost for production, but it is a kind of R&D expenditure whose benefit we are going to get over the time period. So the nature wise, this expenditure, we may consider it where in our asset side of the balance sheet. Okay. But later on, we can decide to apportion it over the time, to amortize is over the period of time, to amortize the value of the this expenditure. Now, what will be the period of your amortization? That again, it is a point of decision. I mean, that you need to make. And another point is, as the legal expenses I mentioned, if the expense, the amount is not too high, so we can consider it in our income statement also. We can take the whole expenditure as in our income statement as it is. In that case, it is not going to affect our profit much if the amount is very low. Okay, so that depends on what is the scale of your business and what is the amount you are incurring in your intangible assets. So if it is so low that even if you can put it here, I mean, what is the reason for apportioning apart from the matching concept? There is another concept which is called the materiality concept. What do we mean by that? If some of the expenses are very, very low, we cannot consider it. If it is, I mean, less than 1% of your revenue, say, we cannot consider it in our income statement. It is pointless because it is so low that it does not affect our profit much. It does not affect our revenue much. It is so low. So by materiality concept, either we club few of those expenses and put it in one head, or we do not consider. Even if we do not consider those, it is not going to create a problem. For example, at the time of making the product, many kinds of wastages happen, right? The materials you use, the lubricants and all you use, I mean, those are the kind of wastages. You cannot, calculate all these wastages and kind of take and consider it as your expense all the time. It is not possible, right? So those immaterial expenses we do not consider. And what is another reason of apportioning these one-time expenditures over the period of time? So that in 1 year's income statement, it should not affect the income much. But if it is so low that if you spread it over a time period and then it becomes immaterial for each year, then there is no point in apportioning those over the period, even if by matching principle you should spread it over the years. So not only the logic behind the nature of the account, but also the amount matters, that where you are doing correct by putting it in 1 year statement, or whether you should spread it over the time. Okay, so both the matching concept and the materiality concept is there, that you can follow to decide that how you are going to record this transaction. Okay, so this 23,750, that is your decision, that where you will put it. So whether it will be in your balance sheet, or whether it is going to be in your expense side of income statement. Okay. Okay, so let us just like the 7,500 legal fees, let us, since it is we are now doing the accounting for the whole year, let us put it in the, and we do not have any kind of information regarding the amortization of that prototype expense. Okay, this kind of R&D expense. So let us put the whole amount in the income statement expense side only. Okay, so we are assuming, but if you say that no ma'am, I will assume that it will be my asset only, I will not have any issue. But since nothing is mentioned regarding the amortization, so I suggest to put it in the expense side of the income statement. Okay, as if we are recording it 1 year only. Okay, the next transaction.
And so this transaction will go in the asset column, right? Fixed asset. And
what is the transaction first?
The previous one, for the prototype.
Prototype. No, as I said, that since nothing is mentioned about the apportionment of that particular expense over the years, or any amortization, how it needs to be amortized, nothing is mentioned. So I am suggesting, or what I am doing is I am taking it in the expense side of the
Okay.
income statement.
In the income statement, yes.
Income statement, okay. Okay,
Yes.
so then next transaction, please.
The revenue, 754500 product.
Divyam, you are answering. Anyone else
Yes.
wants to answer? Okay, Divyam, you please continue.
So, like $754,500 of products were sold. So this will be added in the revenue column.
And where else it will go?
And in the balance sheet, it will. Okay, so right now it will. We are in cash also.
Income statement revenue column, the whole amount you put.
Yes, ma'am.
Where the others?
And in cash, we will also increase our cash. And the other thing.
So is it sold in cash?
But yeah, no, ma'am. But one thing is that accounts receivable is also there, like $69,500.
Yeah. So what will be the treatment? So 7,54,500, rightly said, it will go to the revenue, right?
Revenue, yes.
It will come under revenue in the income statement. Huh? And this 69,500, as you say, that it is accounts receivable. True. That at the end of the year, you have not yet collected the amount. So where it will go? Accounts receivable, where will go, Divyam?
In the current assets.
Current assets. So balance sheet, under current asset, you put 69,500. Fine.
Yes.
So where is the, how your equation is matching then? One side is 754,500 revenue, that means equity increases. One side is 69,500, that means asset increases. Equity increases, asset increases. So what is the difference? Where it will go, the difference?
In the retained earnings or on the equity side in cash, like
Cash, true. So that means one part is not collected, other part is collected
yes,
in cash, right? So it is cash. So in cash column, just put the difference. What is the
yes.
difference?
Six. Just a second, I'm calculating.
Ma'am, can we continue the like
685,000.
Yes. Yes,
hello?
Divya, what is the amount?
685,000. I'm Shreyansh is saying
Six.
something, I think.
Okay, so difference, what is the amount? Divyam said, so put it in the cash column plus that figure, and in the balance sheet, current asset side under accounts receivable, put 69,500, and the income statement revenue, put 7,54,500, whatever is the amount. Okay. So the equation is matching. Asset increases by accounts receivable in terms of accounts receivable increase and in terms of cash increase, and revenue increases. That means equity increases, right? Revenue increases means profit increases, retained earnings increases, equity increases. So the accounting equation is also matching. And we have recorded in balance sheet and income statement. Fine. Okay, the next one.
Hello, ma'am.
Yes, Ritik.
Ma'am,
Ritik or Shreyash, who is
ma'am, I have a doubt.
who? Divyam?
Ma'am, Shreyash.
Shreyash, yes, Shreyash?
Ma'am, after 30 of June, we will continue in the same balance sheet, the other transactions. Or,
Ha. That is true. So the 30th till 30th June, what we have, whatever information we had, we recorded it. Now you just change it as 31st of December. So those expenditures, those expenses, what already you have recorded, you are not changing that. You do not have any additional information on those. So keep it like this and put the new transactions, new recordings. Now, newly you record those transactions. Okay, in that statement only. Just change the head like from 30th June to 31st December. Okay.
okay.
Okay. So the next one, please, Saurav. Yeah, Saurav.
Ma'am, 1,75,000 will go to the asset side, current asset side, and cash will decrease.
Okay, so 1,75,000 is your inventory, right?
Yeah, yeah.
Okay, so
So that will increase and cash
1,75,000
will.
is the raw materials or inventory. It will go where? Where it will go?
Uh, in the asset side, current asset.
Current asset side. Already there was an inventory. If you can see, just add this 1,75,000 with that only. This is one
Yes.
side. Another side is there is a decrease in cash. So in the cash column, right, minus 1,75,000. Okay, so the equation is also matching. Asset increases, cash decreases, and you are putting the asset in the current asset side of the balance sheet, and you are putting the cash in the cash column. So thank you, Saurabh. Then next one. Next one, okay, Shanmukha.
Yes, ma'am.
Yeah,
Vardhan.
Vardhan,
Ma'am,
okay, Vardhan, yeah.
for advertising, we are using up 22,500, so that will we'll keep that in the asset and we'll reduce it from the cash.
Okay, anyone else who wants to, counter Vardhan? Or who is, in favor of what Vardhan has said? Also, you're supporting Vardhan. Anyone?
Ma'am, I can support
Divyam?
his point a bit.
Okay.
Ma'am, perhaps he's considering that the advertisement we are doing, that is not like a short term. We are sort of, since it's a new product, we
Yes,
are trying to
yes.
introduce it over the period of time. So it will have some long lasting benefits. So that's why he is inclined to put it in the asset side.
Okay, so what else we can do? So because his assumption is like this, that's why he is considering it putting the at the asset side. That is true. So how it can change with the assumption? Just tell.
Alternatively, we can also consider that it is not like a large amount. We can consider it as a yearly one-time
Number
expense.
one. Another thing is we can, as you said, that the assumption is it will be for it will give us long-term benefit, long-term revenue generation. It will help. But we can also assume that this advertisement is for the first year only, right? So it can be first year. It is not only about the amount, but if you consider it that it is only going to be spent for the first year revenue generation, then also it should be treated as expense, right?
Yes, ma'am.
So as I said that it is up to you that where you are going to put it, the advertising cost. But since nothing has been mentioned, again I am putting it, I am considering it, given there's a huge revenue we have made, so we can put it the advertising in the what it is called income statement only. So put the advertising expense in your income statement. I mean, as per my suggestion, it is up to you whether you are going to put, but it is my why I'm treating it, because no additional information is given. But based on your assumption, you can put it in the balance sheet. You will find that your balance sheet will also match, my balance sheet will also match, because whenever we are recording, we are always considering two sides of the equation. So it is not that balance sheet will not match for you or me. Everyone's will match, but it will ultimately, I mean, where you are recording, it is based on your assumption. Okay. Okay, the next one. Next transaction, please. I will continue till 12:15 today, 12:15 or 20, because of, you remember the day before yesterday we had some problem. I mean, I could not start the class at the beginning. I mean, it took me 10-15 minutes to get everyone joined in the class. Okay, so I will extend it I mean till 12:15 or 20 today. The next one, please. Next
Direct
transaction.
expenses, so it will be
Yeah,
coming
mention
extra
the,
cost.
please tell us the transaction first. Okay.
So 3,50,000 on direct manufacturing labor and on manufacturing related overheads. So rent, utility,
True.
and labor. So
What
this
are those?
amount.
What are those costs? Where it will go?
So it will go in the income statement as expense.
True. So these will go to the income statement as expense. So what kind of expense it is? I have mentioned. I have I mean marked few types of profit. Gross profit, operating profit, net profit, and so. So these are what kind of costs these are?
It is operational expense.
After deducting this kind of cost, what profit we get? We discussed yesterday. What is the difference between gross profit and operating profit?
Uh,
It will go above gross profit, or it will be recorded below
it
gross
will
profit?
above gross profit.
Above gross profit. So to determine the gross profit, we deduct this kind of expenses. What are these costs called? These are direct costs. These are manufacturing costs, manufacturing labor, manufacturing overhead. Okay. So these are the direct costs at the factory level, at the manufacturing level. These are the kind of cost related to the number of units you produce. The cost vary also along with, I mean, depending on that, the cost also vary. But it is not your periodic or fixed nature, these costs are. So these are not the administrative or selling cost kind of. It is a manufacturing cost. So manufacturing cost always comes under the cost of goods sold. Okay, the broad head is
Yes.
cost of goods sold. And we put it there to determine our gross profit, gross margin. Okay, so true. So 3,50,000 will go to your income statement, just right after your revenue, you will put that 3,50,000. Okay. And where the other side will go, 3,50,000. One is your in your income statement direct cost or COGS. What is the other side? Three lakh 50,000. One recording we have understood. What will be the other side? I mean, you need to record it somewhere else also, right?
Ma'am, cash.
In cash.
Okay, just in the cash column, deduct 3,50,000. Okay. The next one, yes.
Hello.
Yes.
Ma'am, can you explain part 4 again?
4. That is advertising.
Yes, ma'am.
Yeah, as I said that advertising, if you think that this advertising is for revenue generation of the current year, then put the whole amount in today's, in this year's income statement as an expense. If you consider that this amount is going to generate revenue for the coming years also, then apportion it over the time period, over this year, next year, whatever maybe the year it is helping you to generate revenue. Okay, so here we are considering, see, the amount is also small and nothing has been mentioned, and in comparison to the amount, the revenue is also huge. So that means as if this advertising we are spending for this year's revenue generation only. So that's why we are considering as expense. We are not considering it as our deferred revenue expenditure in balance sheet asset side. Okay.
Yeah, yeah.
Okay, then next, then after 3,50,000, what is the amount?
$80,000 was spent on corporate salaries and other corporate expenses.
So what will be the treatment? Divyam, you are answering?
Yes, ma'am.
Okay, Divyam, what is the treatment?
It's also an expense, but so it will go after the gross profit this time, I
Yes,
think.
it is after the, it is administrative expense, right?
Yes, yes.
So it will go after the gross profit. It will be considered as operating expenses in the income statement. And what is the other side?
And in cash, we will
Again cash, again deduction of
reduce.
80,000 cash. Yeah, in cash column, deduct 80,000. Then next one. So see, lot of expenses actually we incur as a startup, as a big company, but if you can understand the nature of the expenses, it will be very clear to you what is your liquidity position, what is your profitability position, how much you are adding year after year in your equity over and above your contributed capital, how much you are adding. Okay, and how much asset you are generating, because all these has implications on the performance. All this will give you, all this will help you to understand what is your return on assets. If you are not sure about what is your asset, how you are going to ascertain the return on asset, the return on investments? What your investment you do not know, what is your expense, what is actually, boosting your profit, you do not know. All the drivers you do not have any clear idea. So how you are going to assess your company, how it is doing, right? So these are very important. So then next,
Next
number
is
6. Number 6, yes.
150,000 was spent on machinery.
Yes.
So our fixed asset will increase.
Yeah, so just remember that already in the half yearly statement you have put some fixed assets. So just add to that again 1,50,000 machinery. It will go to the fixed asset side of the balance
and
sheet.
cash will decrease. So that is equity
Cash
side
will
will
decrease. Yes, yes, yes. True. Okay. Then the next one. Can you please, anyone raise your hand, please, apart from Divyam?
Ma'am, I had a small
Aditya,
doubt.
yes. Yeah, yeah.
Like when we spent $150,000 on machinery, we sort of are in the sense of question that we are spending on additional machinery. Like it's not on repairing the existing machinery, because in that case it would be considered as an operating expense.
Yes, 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 true. Another important thing, just remember that machinery, when we talk about the maintenance. Maintenance is an operating cost, definitely. But say, for example, your machinery, uh, that 1,50,000 says the amount of the machinery, but it is just the face value of the machinery. Now you need to, I mean, from the point it is going to be delivered, you need to bring it and you need to place it in a proper place. You need to install it and then only it will start the operation. Now this installation cost, if you are bringing this, you are using some truck or vehicle to bring that particular machinery and installing it, that installation cost, the labor who are installing it. So all these costs actually is not your expense. All these costs will also be, though they are very small amount and though they are costs, but still they will be treated as your expense. They will be added to the value of the machinery, okay? Because our accounting standard says that the value of the asset is, means the asset should be in a position that it is usable. So all the cost which is incurred to put the asset in use, those also will be included in the value of the asset. Okay. So generally the maintenance expenses, recurring maintenance expenses, those will be treated as your expense. But at the time of installation, whatever expense you make, that will come under the asset. Okay, that is one thing that you need to
Yes, ma'am. In the
remember.
first assignment also, when we sort of brought a crane, there was some logistics cost involved.
Yeah. So
at
that
that
is
time also I
different
was,
from your recurring maintenance expenses. Okay.
yeah, so it will be in the asset cost itself.
Asset cost, yeah. So then next,
Ma'am, can I?
yes.
Ma'am, in the seventh transaction, company has borrowed $50,000, so the cash will increase by 50,000, and repaid the loan by the year end. So, also there will be, I guess, there will be a current liability, and finally the interest paid on the loan is 7,000. Sorry, 750. So the interest expense, the income statement will be 750.
So what about the 50,000? As you said correctly, that the cash is coming in and the cash is going out, right? And the loan you are considering, you are recording, and the loan again you are repaying. So
Yes,
ultimately, it has no effect, right, in the financial statements, right? I mean, within the same accounting period only. I mean, it is the transactions have, I mean, first happened and then it is, I mean, completed also. So that means at the end of the year, when you are preparing the income statement and balance sheet, in the balance sheet there is no existence of that loan because you have taken and you have repaid. And when you are showing at the end of the day the picture, the status of your I mean, financial position, and in the cash also, that cash came in and that cash went out, so there is no reflection in the balance sheet. Now what about the 750 interest expense, Ritik?
Ma'am, it will be happening in the income statement at the year end.
Yes, true. So it is your, it will come where we have the margins, right? So where exactly it will go, the interest expense?
Ma'am, it will. I guess it's a financing
Finance
profit.
cost. So it will come after operating profit, right? So it is interest cost, that means finance cost. It is not going to tell you about your I mean, efficiency in operations. It is out of the financing decisions you are incurring this cost. So it is your finance cost and it will come below the operating profit. Okay. Okay, and where is the other side of the transaction, the 750? One is your income statement, before, below operating profit you will put it, and where other you are going to record it?
Sorry, ma'am, didn't catch it. Like in the balance sheet, in the cash account.
Yes, so balance sheet we are not actually now putting the cash, we have made a separate column. At the end we will take that figure. So in the cash column you just record minus 750.
Yeah, yes.
Okay, minus 750 in the cash column. Okay. What else?
And can you please explain again about the 50,000 that we took and repaid?
50,000 you have taken as a loan. So that
Yes.
means at the time of taking the loan, it is recorded in your liability side as loan. Your loan
Yes.
increases, and at the same time your cash increases. Asset increases, liability increases. Okay.
Yes.
And within the same year you are repaying it within that accounting period only, before December. So that
So
means
we'll
repayment
have
of
to
that loan
reduce
is
it again.
nowhere, and cash is also nowhere, right? Cash is also you have deducted from your cash balance. So when you are preparing it at the end of 31st December, definitely you will record it as your in your journal account, as your journal. You will make that entry. I have not taught the journal because you need not to know those details. Your accountant will do those for you. But as a manager, you need not to, go for that much details. I mean, it is not possible also to do it in the class. But as your journal entry will record the transaction. But when you are going to see the statement at the end of the year, it is no more in your balance sheet, right? That particular loan.
Yes, ma'am.
So that is what it will not be reflected in your balance sheet. Okay.
Only
Next,
750 would be there.
only 750 is your interest expense.
Yes.
The next, so next is that statement that even if we are doing so many things, revenue we have generated so much, but still there is outflow of cash. There is a continuous, dilution of cash happening. So it is, they are worried. Now there are few, notes, few points, additional points have been mentioned. Let us do it one by one. First one, go through it, number one, and tell me the effect. Okay. Is there anything we will do with this information? Is this information useful?
Maybe for depreciation.
Divyam, yes, Divyam, yes. It is
Maybe
for
for
depreciation, because here first time your machineries, so you have already recorded, but first time you are getting the information on the life of the
machine.
fixed asset, right? Life of the machine. So what you need to do? Already you have that in your balance sheet, right? The machinery.
Yes,
Whatever, maybe the twice you have bought it. Now remember, the machinery, the life of the machinery is 10 years. It is mentioned, right? Okay.
Yes, ma'am.
So life of the machinery is 10 years. So if we depreciate the machinery over the time years with the same amount, so you just need to divide it by 10, right? To get each year's depreciation. Now the point is, in particular this year, this accounting year, one machinery you have purchased at the beginning of the year. Is it at the beginning of the year or at the middle of the year you've purchased the machinery? Can you remember the first
Ma'am,
page?
2 different times we have bought machinery. So
Two
first
different
one
times. What is
was
the
in June.
June,
So
and the next one?
and next one was in the second half, but the date was not mentioned, I suppose.
Second half beginning or second half end? Close to December or close to June?
I'm close to June.
June, right?
Yes.
So that means we can treat it as middle of the year. Both the machineries have been purchased. Okay.
Yes.
One
So
machinery was in June, one was in early July. So
early
they are
July. So
more
we
or
can
less the
consider
same
it.
time.
Okay, more or less same. So what you need to do, not only not to divide it by 10, but you need to divide it by 20, because the depreciation cost will be half yearly only, because this year you are going to record the depreciation, right?
Yes.
So this year for the first half, the machinery was not there. So why you are going to put the depreciation cost on that? So the machineries, it came to the business only at the middle of the year. So only 6 months depreciation you will consider. So that's why you will divide the total value by 20. And the 6 months value you will consider in the first year. From the next year onward, you will consider the whole 1 year's depreciation. But for the first year, since the depreciation in the machinery we have purchased in the middle of the year, so we will only consider the 6 months depreciation. So that remember, okay? So now tell me
Ma'am,
the treatment. Yes?
I have a small query.
Yes?
We are taking the counting period from January to December. Then,
Uh-huh.
not like April to March, not
No,
like
no,
that.
no, 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 no. Here it is calendar year they are following.
Okay.
So in India also, mostly it is financial year. I mean, the companies follow, but you will find few places. It may be the July as the July to June is the year that the companies follow, and few places where the calendar years are followed. Very, very rare. Mostly it is a financial year in India we follow. Okay. Okay, the next, that is the life of the depreciation. And tell me the entry, where you are going to make the entry.
Ma'am, fixed asset will decrease.
Yes, so in your fixed asset balance sheet, write down less depreciation and put the depreciation amount. Fixed asset balance sheet asset side, less depreciation. Under the machinery, less depreciation, put the amount. And what is in your and where the other side will go? Where one is depreciation, you are deducting from machinery, and
We will decrease the profits.
yes, so it is an expense, right? So
Yes.
just like your amortization, just like your the deferred revenue expenditure, what we discussed so far, just like that, the value of the machinery you are spreading over the period of time, the machinery is helping you to generate revenue. Okay, so the part you are taking out from your asset account, and that part you are putting in your income statement expense as expense. Okay, okay. So the depreciation expense will come to your income statement expense side, and your balance sheet asset side you just deduct it. So your expense increases, that means equity decreases, and asset decreases. So equation is matching, asset decreases, equity decreases. Okay, the third point, the second point. Okay, I mean, let us stop here only, because the second point, it will take time. I mean, I need to have an elaborate discussion on that again, because of his inventory, cost of goods sold, and all these things. So let us stop here today. And so are you okay that we are going to take the exam, consider the exam on 15th, Wednesday? All of you? Is it okay with all of you? So 15th,
Yes,
Wednesday. And I told you the pattern also. So 30 minutes it will be an exam, and 30 minutes again the kind of the question that I am asking now, I will asking the same way, but it is not possible for me to ask each and every individual. So I will ask group wise. Okay. So be prepared for that. And these particular assignment, whatever the part you have done, just share with me. I think you have more exams today, right? Or the exam is
ma'am.
over?
We have
Yes,
some
ma'am.
exam.
In the second half, maybe you have exams, right?
Yes, ma'am.
Yes, ma'am.
So you do one thing, by tonight, you just send me whatever part you have done in that email ID. You remember the email ID, your TA's email ID, Gulshan's, I have given you?
Ma'am, could you like send it again?
I have sent it in the, I mean, you can find it in the team notification only, I think. I've posted
Ma'am,
it
will
there.
it
Okay, I
be
will.
Okay, ma'am.
I
will
Okay,
it be a
will,
then
group
yeah.
we'll
by?
search.
Huh?
Okay,
Yeah,
then
I
Ma'am,
we
the
can
will
send it
submission.
once more. But the point is, I mean, only you send me by tonight. I will not consider any submission tomorrow. Whatever part we have discussed in the class. Rest part I will discuss in the on Thursday's class. But whatever we have discussed till now, you will put it in the. I hope that you have put it in the spreadsheet and share it with me by tonight. Okay.
Yes.
Okay. Thank you.
Ma'am, this submission will
Yes.
be
Thank you.
individual. Ma'am, this submission will be individual or group wise?
This is individual because this is done in the class only, and we have, it is the outcome of our discussion. It is not that you need to put extra time for that. But since you have exam, so that's why I'm not asking you to submit it right now. Take your time. I mean, just see once more in the evening and then send it. Okay?
Ma'am,
It is.
Okay.
like I have a doubt regarding the test. Like, just we'll have 30-minute viva, nothing else like
Yes,
subjective
yes,
test
yes.
or so.
No, no, 30 minutes is written test, as I said. It's a 1 hour class, right? The Wednesday. So first 30 minutes will be your written test and the next 30 minutes will be your oral test. Okay.
So written test will be subjective or will it be MCQ type?
You can think it of as MCQ only. And not MCQ, maybe very short answers, maybe in 1 or 2 words.
Okay, ma'am.
Ma'am,
Okay. Yeah.
ma'am, can you like repeat what will be the pattern of the oral test? Like that thing, can you repeat, please?
Pattern of oral test I cannot say, right? I mean, whatever we have discussed in the class, I will ask on that only.
No, ma'am. I mean, like you will ask each and every person or like that thing. I want to.
No. Each and every person I cannot. So I will ask anyone, and I mean, group wise I will ask. Okay.
Okay, ma'am.
Can you please again tell the syllabus?
Whatever we have, done so far, the contract act, the balance sheet, the income statement. But I have shared also the income statement slides also I have shared. And also, as I told you, that see the answers that you have submitted. And if you have any doubt, you can ask me on Thursday's class.
Ma'am, so what about the earlier deadline which you extended till Saturday? So that is void now, right?
For this assignment, right?
Yes, ma'am.
Yes. That I will. I mean, I'm giving in the notice form also. Okay, I'm just posting it. Huh?
Okay, ma'am.
Okay. And you need not to complete also. We will discuss the rest of the part. Whatever you have done so far, that only you just send me. Me means I mean to Gulshan, you just send those mails. Huh? Okay, fine. Let me take the attendance and then you can leave. Okay, so you can leave now.
Thank you, ma'am.
Yeah, I have downloaded the attendance.